welcome to this explainer. Today, we're diving into some crucial source material that outlines a totally high-stakes scenario. And unfortunately, it's one that catches way too many traders completely off guard. Let's get right into it.
Picture this. You're holding a beautifully planned trade. It's in profit, hitting literally every single one of your technical confirmations. You're feeling good, right? Then suddenly, your funded prop firm account just closes. Terminated. The reason? You held a position through a news event you didn't even know was scheduled. Boom, account gone. It's a devastating blow. And honestly, it happens all the time to highly disciplined traders who genuinely thought they were following every rule in the book.
So to make sure that never happens to you, here's exactly how we're going to break this down. First, we'll look at the silent account killer, then high-impact restricted events, why firms ban news trading in the first place, followed by a rock-solid 4-step morning protocol, and finally, how to handle accidental violations.
Okay, kicking things off with part 1, the silent account killer. Just what exactly are these news trading restrictions?
The source defines the restriction window as a specific time frame. This is usually about 2 to 5 minutes before and after a high-impact economic event. During this tiny window, holding any open positions is strictly prohibited. And the absolutely crucial takeaway here, intent is completely irrelevant. Seriously, prop firms don't care if you were trying to game the news or if you just, forgot to check your calendar that morning. If you are inside that window with an open trade, it's an automatic violation, no exceptions.
Now keep in mind, the exact window varies quite a bit from firm to firm. For instance, FTMO is super strict, exactly 2 minutes before and 2 minutes after the scheduled release. Meanwhile, a firm like FundedNext has rules that actually vary depending on the specific account type you're trading. But generally, most other firms fall somewhere in that 2 to 5 minute range. This perfectly highlights why you absolutely must thoroughly check your specific firm's rulebook before placing a single trade.
Moving right along to part 2. Let's talk about the specific high-impact restricted events, the major red flags you need to know. Look, you don't need to memorize every single minor economic quirk out there, but you absolutely have to know the heavy hitters. We're talking about non-farm payrolls, NFP, hitting the wires on the first Friday of every month. Then you've got FOMC and Fed rate decisions happening 8 times a year, the monthly CPI inflation data, quarterly GDP reports, and major central bank decisions from the ECB and Bank of England. These are the major market-moving events that are universally restricted at almost all prop firms.
So how do we track these without constantly refreshing news feeds like a maniac? Well, it's actually a pretty simple process. Just use an economic calendar like Forex Factory every single morning. You want to look exclusively for those bold, red-colored, high-impact events. Usually the orange, medium-impact events are totally safe to hold through, though again, double-check that with your specific firm's rules. And hey, if an unscheduled surprise event hits the wires, like an emergency geopolitical announcement, the rule of thumb is to close your positions immediately the second you start seeing abnormal volatility.
Let's dive into part 3 and explore why firms actually ban news trading. We'll call this the mechanics of chaos.
What is really fascinating, and honestly slightly terrifying, is the reality of a 20-pip spread. Think about this. During a massive event like NFP, a normal, totally boring 2-pip spread on the Euro-USD can violently widen to 20 pips in a matter of seconds. Imagine blinking and your transaction cost just multiplied by 10. It is absolutely wild, and it's more than enough to turn a perfectly good setup into an instant disaster.
And that brings us directly to the 3 violent market mechanics making consistent risk management basically impossible. First, you have that dramatic spread widening we just mentioned, which can instantly trigger and ruin your carefully calculated stop losses. Second, extreme slippage. This is where your stop might get filled 10 to 15 pips worse than you originally planned, simply because the market is moving way too fast for the liquidity providers to catch up. And third, price gaps, where the price literally jumps from one level to another without actually trading anywhere in between. Remember, your prop firm challenge is testing your ability to manage risk consistently. Under these wild conditions, consistent risk management is a complete fantasy, which is exactly why they ban holding trades during these windows.
All right, let's look at part 4, the solution, the 4-step morning protocol. Think of this as your 90-second daily defense. The source material outlines this brilliant 90-second routine that completely removes the risk of ever forgetting an event or getting tripped up by a time zone change. Step 1, open the Forex Factory calendar. Step 2, check for today's red flag events. Step 3, write those exact times down in your local time zone.
And finally, step 4. Set 2 phone alarms, one for 10 minutes before the event and one for 5 minutes before. It's really that easy.
Let's actually walk through how this builds in real time, with a hypothetical red flag event scheduled at, say, 13:30 GMT. Your alarms force you to react way before the market chaos ever has a chance to hit. So at 13:20, that first alarm sounds. This is your immediate cue to review any open positions. Then, at 13:25, 5 minutes out, the second alarm blares. This means you must close all trades. You need to be completely flat. Finally, at 13:35, the standard restriction window ends, the dust settles, and you're totally safe to evaluate the markets and look for new setups again.
Which brings us to Part 5, handling accidental violations. What if things go wrong?
It's the ultimate dilemma, right? What if your trade is sitting just a few pips away from your profit target? Or worse, you're sitting in a losing position when that alarm blares? Well, the consensus across all major trading advice is crystal clear. Do not risk your entire funded challenge for a single trade. Close it immediately. Take the profit or accept the loss. Hoping for a lucky reversal during news volatility is literally highlighted as a guaranteed way to blow your account.
Now, what if you actually do accidentally hold through an event? Maybe you missed the alarm entirely, or your internet went down at the worst possible moment. Look, don't panic. The recommended damage control involves 3 specific steps. Step 1, document the event and your exact position details. Step 2, check your specific firm's violation policy. Honestly, some actually do give a warning on the very first offense. And step 3, proactively contact their support team with complete transparency. Explain that you made a mistake and that you've implemented a strict alarm system to ensure it doesn't happen again. Being upfront rather than trying to hide it can sometimes actually save your account.
There's a really great quote from the material that sums up the reality of this strategy perfectly. It says, "News restrictions require discipline only twice per day. Once in the morning to check the calendar, and once when the alarm sounds to close positions. It is the simplest rule to never break." Think about it. Unlike daily drawdown limits that require constant, exhausting emotional control, managing news restrictions is 100% predictable. The ultimate takeaway here is all about building a habit. The source emphasizes that running this exact 4-step protocol for 30 consecutive days, without missing a single morning, turns account protection into an unbreakable automatic response. It completely shifts the burden from relying on your memory to relying on a totally foolproof system. Because once it becomes a habit, news violations become completely impossible. If you want the complete system I use, including templates and calculators, check out the Funded Trader Blueprint linked below. It really leaves us with one final fascinating question to ask ourselves. In a market where we can't control the prices, the news, or the algorithms, why wouldn't we take 90 seconds a day to master the one thing we actually can control?